Okay, so it's Nick here with you in part two of this Carney sort of pound dollar short pending situation. Carney is speaking tomorrow. And the other reason I'm interested in putting a pending order in at 153.54 is because I know a major European bank have placed pending orders at 153.20 to go short. So I know that a major bank has placed a similar position. My position is not the same. In fact, I'm going for a more extreme entry. The bank position I know is at 153.20, and I'm going 53.54. So I'm asking the price action to go 34 pips beyond what a major bank is prepared to enter into, and my stop is higher than the bank because I'm at 54.06 and the bank is actually at 53.80. We both agree that after the announcement there'll be dollar strength, but it's just a question of where we get in and whether we'd be stopped out. Targets are very, very similar, but if I can get in at more extreme price, I can come out before the bank's exit. So the bank's got an exit strategy of 51.39, okay, and my exit point would be 51.54, which is before the banks. So it increases the probability of profitability because the trade doesn't have to move so far. Sorry to speak a little bit quickly, but the video size will start increasing too much. So I've got to keep this within about 4 minutes. Now, the risk of this trade, there are two risks that we need to be aware of. One, I could be wrong, that the pound actually just strengthens beyond our stop so that it would go past the 154.06, which is my top red horizontal line here. It might just rocket up. Now, on the 1 hour, I think that unlikely because since the beginning of the year, in fact, going back a little bit into December last year, it has not been above this level. So there's got to be a heck of a statement tomorrow. And really, I'm just looking for a very cheeky sort of, it spikes up, the trade is triggered, and then it runs out of steam after, say, 15 minutes of Carney speaking, and the market settles down, and they start selling off the pound and buying dollars back. And the red line here, the horizontal red line, is my profit target. And from here, where my cursor is, to here is a 200 pip move. And I'd be prepared to let this run for 5 or 6 days or even 7 days, which is a long time. That could be about a week and a half, which is like a lifetime in the forex market and currency trading. But if it makes me 400 pips, I could be done for the month on that one trade, because the way I've allocated trade allocation of money, I would have 40% profit off of this particular trade. So it's a huge potential return. Now, before you get too excited, the problem in this is that maybe it just doesn't trigger, so it doesn't even hit that point. And the other thing is that if there was something extremely unusual in the statement and different to what the market was expecting or had priced in, then it could rocket through our stop and be on, the pound could get a lot stronger. So that's the risk involved. So let's wait and see, and I'll keep you updated with what's going on. All the best to you, and thanks for listening.